doing? Cool. I'm just reviewing GJ as this actually is Asian session. And this is the session for GJ. But I wanted to turn this into a 4XLG Masterclass, as we have not gone over that in a while. You guys still use it? I just want to see, where's everybody? Are you guys good with the 4XLG Masterclass? I don't want to take us too far away with what we've been focusing on. I know our focus has been in a little bit of a different area in the past couple of weeks as far as reading patterns, just price action and things like that. So I kind of just wanted to bring it back to what we do here best at MCA, kind of scout, not necessarily scout, but just look at how to read the 4XLG. So we'll go ahead and do that. I think you guys are okay with that. Let me get another pair up. GJ. You use it as Confluence. There you go. There you go. Don't trade it as much anymore, but I will use it as Confluence. Yeah, and that's honestly same here. I mean, clearly you guys know I haven't used the 4XLG since we started doing price action and everything. And where we were focused on the boot camps. I always still use the trap though. That's bread and butter. I'll never not use that. So we'll look at the 4XLG today. Let me turn this off. 4XLG, right? All that is it is a indicator in TradingView that is pretty cool. Let me just say that. I'm gonna go ahead and start. We'll get looking at it. When you are going to add the 4XLG to your chart, for those who don't know, who have never used it before or added it to your chart, you're going to come up to the top here. You're going to click indicators, metrics, and strategies. It's not going to be in your favorites unless you've already favorited it, but you will type 4XLG setup, EMA setup, right? You have to type it like that so it'll pop up. Go ahead and click it. I favorite it so that way it will pop up here and you won't have to search it. You click it, go ahead and add it to your screen. Now, once we do this, we're not done because we don't use everything here in the 4XLG that's provided. So I go into the settings. All right, and we see the settings here. We've got different names, different numbers. So I'm going to tell you what we are focused on here when we are using the 4XLG. Our main focus is going to be mustard, ketchup, water, mayo, and blueberry. Right? So you're going to unclick carrot. Right? But I still encourage you to eat your vegetables. But we don't use carrots when we're talking about the 4XLG. Go ahead and unclick the 50 and the 200 SMA. We don't need those either. It's not necessary. From there, what I also like to do is just to make the lines a little thicker. Oh, wait. Where we at? How do I? Oh, here we go. Where is it? Oh, duh. I go, what do I do? About 2, right? I'm gonna go with about the second thickness, just so that way we can see the line and clearly see what we are working with here. The other thing I'm gonna do is change mayo to white because that's what color it is. You shouldn't eat black mayonnaise. So you're going to also make that change on your chart. Cool. Everybody's good so far? All right, everybody's good so far. We understand how we are going to apply it to our chart, how we adjust the settings and things like that. Drop some 3s in the chat if you follow me. Perfect, perfect. Cool, cool, cool. All right, now let's go ahead and break down what it is that we are using when it comes to the 4XLG. We saw these names, but now we kind of need to know what they are and why are they those names. I don't really know why they are named that. I just figured because the 4XLG was sauce, and whoever knew or whoever created this knew it was saucy, so he knew what he was doing, or she knew what she was doing. You know what I'm saying? So that's why the names are what they are. Mustard, right? Mustard is going to be the 7, right? Exponential moving average. Right, so we've got mustard. That is the 7 EMA. Right. After much mustard comes ketchup, which I personally don't think they belong together on burgers, but some people do, so I'm not going to fight them there. All right, we've got ketchup, and ketchup is the 13 EMA, right? That is the, what's it called? The value of that EMA is 13. All that means is it's just counting it's giving you an average of the last 13 candles. Right. When using ketchup and mustard together, right, these are used for scalping. Right. Ketchup and mustard are used for scalping. We good there? I make this yellow. That'd be so cool. Oh, but it would be all of it. All right, that's too much work. I wanted to do that, really make it stick. Right, ketchup and mustard are used for scalping. So what that means, ooh. Where'd it go? Oh, there we go. All right, what that means is when you come to your chart and you see, I'm just giving you examples, right? Any scalping time frame, whether that be from the 1 minute, I would say up until the 17-minute time frame, right? Probably be the last time frame that I'm really going to look to scalp in. 30 minutes starts to turn into an intraday trade. Right? When I'm coming to my time frame, wherever I am, right, I am going to look for a ketchup and mustard cross. Is it in the front? Sorry, I'm trying to make sure we can see it. Can you guys see it enough? There we go. I'll bring it to the front. It's because the candle is red where the cross is happening. So I think that's what's going on. All right. When you come into the market, wherever, all right, cool, you see it, good, good, good. All right, when we're coming into the market, all right, the yellow is very thin. Yeah, for these purposes, I'll make them a little thicker. I don't really like how they look either. Better? We're good now? Is that better for you, Renee? Cool, cool, cool. Just want to make sure everybody can see it. All right. Ketchup, mustard. All right. Mustard, ketchup. Now I just got to find that dang box. Yo, TradingView, me and TradingView don't really do well together. There we go. Just want to make sure we can see our notes. So we've got ketchup and mustard, and I told you that they're used for scalping, right? So what I am looking for when I am using ketchup and mustard I am looking for mustard to cross either to the downside or to the upside through ketchup, right? What do I mean by that? When mustard, right, crosses down under ketchup, you sell. All right. When mustard crosses down under ketchup, we sell. So, for example, we do not have the cross yet, right? You want to wait for the cross to happen, right? So, oh, dang, that went so fast. Sorry. Was it right here? All right, you want to wait for the cross to happen. And the reason is because if we were to enter previously before it crossed, you see now we would be in drawdown, right? So you want to wait to see the actual cross. All right. Did ketchup, or I'm sorry, did mustard cross down under ketchup? Yes or no? Yes, it did, right? So what is that an indication of? All right, we're selling. All right, we sell. So that's the example, right? We would enter the market. I'm not worrying about where the candle is. If I see the cross, I'm going to enter, regardless of if it's bullish or bearish. And I'll show you why. All right. Stop loss, previous market structure. All right. And now a couple cool things happen when we're using the 4XLG. Previously, I was telling you guys to use what, like the next nearest moving average. 9 times out of 10, it's going to end up being Mayo. And I'm going to explain why first. I'm going to get there. All right. So just using the 10 and 20 first. All right. This is what we're going to do. We're looking to sell. So as soon as price crosses, we should see price start to move to the downside. And there we go. All right. If that was my take profit, we entered the trade and price went straight to take profit. All right. All based on ketchup and mustard. Now, there's more moving averages, and I'm going to tell you what they do. It's pretty cool. We have this blue one here. You guys can see it. Yes. Let me go ahead and make that adjustment to all of them because I didn't do that. Make that adjustment to all of them. All right. This blue exponential moving average right here, this is actually the 50. Right? We know it. All right. I'm turning my 50 on. You see how it's not going anywhere? I'm going to turn the 4XLG off and we see the 50. So water, right? The 50 EMA is water. That's what we call it. All right. Water is the 50 EMA. And it's used to identify the intraday trend. Just as the 50 exponential moving average is when we use it. Right? Used to identify intraday trend. Here is a tip, right? When you are above water, you're floating. You can swim, right? When you are below water, you drown. You sail. Simple as that. Is that understandable? When your head's above water, you can swim. You can breathe. You're good to go. You can buy. Your head's underwater, right? You'd be drowning, so we'd be selling. So I'm telling you we have one entry because I'm going to explain to you how we can layer into this at the same time. All right, we've got one entry first off of our scalp. Now that we've hit take profit for the scalp, where is price? Are we above or below water? All right, we're below. So the cool thing is when you already gotten your cross and you know that price is selling, as soon as price broke underwater, right? And I let the scalp play out first so we can see. As soon as we got this candle closed underwater, what was this confirmation of? All right, now that we've closed and our head is below water, what is that a confirmation of? Exactly, right? We're selling. When you see this candle close below water, right? One or two things. You can either A, enter at the close of the candle, or B, wait for the retest of water. All right, so I'm going to show you how this would look. Water's entry, right, would be our first like intraday trade. I'm literally going to show you how you can trade every style trading with the 4XLG, right? Waiting for the retest off of the 50 would be our intraday trade. So we'd probably have, oh, I'm sorry, I don't need to have that. All right, we'd have a sell limit here right at the 50. I'm going to show you guys some things I may have forgotten with the 4XLG. All right, so now we've got that. But we see this moving average down here, and I mentioned it before, right, when we were using the scalp. This little moving average hanging down here is the 200 exponential moving average, right? The 200 exponential moving average. So after mustard and ketchup, after water, right, we then have another indicator, which is called male. Separate it like that. Now, the cool thing about Mayo is it's showing you support of a higher time frame, right? Mayo is showing you and identifying support, I'd say, from the 4-hour time frame up until about 8-hour, 12-hour time frame, right? 4 hours and above, pretty much, is what the 200 EMA is showing you the trend of, right? So remember, again, we've got our ketchup and mustard, our sauce, used for scalping. So this is showing us the scalp trend. Really no trend at times as prices just fluctuate. We have the 50 EMA, which is used to identify our intraday trend. So I'd say about from the 30 to the 4-hour time frame, 3-4 hour time frame, right? Now we've got Mayo, which is used to identify the 4-hour and above. Right. So the cool thing about using the 4XLG, guys, is you are honestly catching the reversal before the larger time frame is showing you the reversal. A lot of times we talk about market structure and patterns. What I should also mention is if there is a strong downtrend on the 5-minute time frame, there's a possibility that can trickle over into the 30-minute time frame. If the 30-minute time frame starts to go bearish, it's a possibility that can affect the way that your 4-hour time frame or above looks. So you have to be able to think that way as well, that even though we do TDA, right, top-down analysis, You can also do analysis, right, from the bottom up as well. You have to be a little skilled and understand what you're looking at to do so. But the 4XLG helps with that, right? Ketchup and mustard crossing has told us that the trend is starting to change and go bearish on a smaller time frame. Price closing underwater is also letting us know, hey, on the 30-minute time frame and above, intraday, the trend is starting to change. You guys follow me? We understanding so far? Right, what time frame? And what are we using ketchup and mustard for? What are we using ketchup and mustard for, and what time frame? All right. All right, it's lower time frames from the 1 to 17. There we go. We're using it to scalp. 5 and 15 if you use it. There we go. There we go. Perfect. Water. What is water? What's water? And what do we use it for? In respect to the 4XLG. All right. All right. So let's see how price plays out, right, on our scalp and our intraday trend. Now, this is also why I tell you guys, please do not close your scalps when we know the overall trend of that pair. Here's an example. We now have two positions, possibly, if price gives us the retest. So it didn't even retest. That's why I gave you the one option of you can enter on the close of that candle. Let's see if price does give us the retest. Not at all. It's skated. All right. So here we are now coming to our 4-hour and above trend line. All we are looking for is the same thing that we do in any kind of trading. We're looking for a break and a retest, right? If we get a break and a retest, then we have our last lovely little indicator down here, and I'll explain how we use it, right? Because there's something else special about mayonnaise. And actually, right, even though it wasn't at this level, you can see price does pull back to the 50 EMA. You can take this entry, right? When price starts to pull back to that 50 EMA, that would be, right, your intraday trade if you wanted to take that. So let's see if we get a break under Mayo. All right. So again, what is this moving average and what does it identify? All right, what a moving average is showing there? All right, 4 and above. There we go, and it's the 200. Did we break, right? Structure of the 200. If this was a trend line, was this trend line broken? Right? Exactly. So what you now are waiting for is a break and retest, because like I'm saying, like I'm letting you guys know, right, that 200 is used to identify the 4-hour time frame and above. It acts as support and resistance for that time frame, right? It acts as support and resistance for that time frame. Also, if you are to get a retest of this level, this would be our first swing entry. Does anybody want to take a guess as to why we may be taking and looking at swing entries when we Oh, I froze. Oh. Am I back now? Okay, I'm back now. I'm back now. Okay. The question was, what was the question? What was the question? What was the question? Or another. Oh, right. Why would we be looking to take our first swing entry, right, at the retest of the 200 EMA? What is price letting us know, right? What is price telling us and showing us here? Remember, this is our lower time frame trend. We see it's coming down. We also see the intraday trend has started to change as well, right? So what are you guys also noticing, right? What else do we see? Other than the crosses, what else do we see? What kind of indication is the market giving us? Right, not just a break. That is one. All right, price is under Mayo. That is one. It's not what I'm looking for though. Think outside of the 4XLG. What else do you see? What's present? What did we just spend 2 weeks talking about? There we go. What is that? And what is an M pattern? What is it? What is that? What is an M pattern? There we go. Thank you, Skeeta. It's a reversal. So if you see price, price is below water and price is starting to move below our 4-hour trend, what is that an indication of? What would that all be an indication of? I said it just a second ago. There we go, Marissa, exactly. A reversal in trend. And we are looking at this on the 10-minute time frame, mind you. We have not left this time frame, didn't go to a higher time frame, didn't go to a lower time frame, didn't do any of that. All right. So now that I'm doing another 4XLG and I'm thinking about this again, right? Technically, I don't want to say technically, but I want to say what I am noticing now. If you weren't comfortable taking this low of a swing entry, turn your water entry into a swing trade, right? Just if you do take that re-entry off a retest after ketchup and mustard, right? And price crosses the retest. Price retests the cross, and you take this entry. This would, I would want to say, be your first swing entry, right? I would want to say that be your first swing entry. I would want Mayo to then be your second swing entry, right? With Blueberry being the target. And I'll explain what Blueberry is and how that works out. And that's if price gives us the retest. Price may not always retest it in that way, which that's totally fine too. That is totally fine too. Now, just did all that explaining about patterns and showing you guys everything. Now it's time for Blueberry. And Blueberry is our 800 exponential moving average. Oh wait. Used to identify a trend. Used to identify trend on 8-hour time frame and above. All right. Also, it's the final target, right? It would be your take profit for all of your trades. It would be your take profit for all of your trades. Once price hits Blueberry, then we start talking about reversals and looking at price going the opposite way. right? So now at this point, we'd have 1 entry, 2 entries if we get this retest, right? So your stop loss for the Mayo entry is different from previous entries. Why? I didn't even move it. That was just there. That's just your brain overworking and overthinking again, Renee. What's stop loss every time? Do I ever change it? What is our stop loss? Do we use? What is our stop loss, guys? For everything that we do here. There we go. So we should never have a question about where it is. It don't matter where it is on my chart. Just know where it is for you. This is all subjective. I just put this on here just to show entries. I'm not even worried about stop loss right now. And realistically, you wouldn't be either. From this entry, you're currently 21 pips in profit. If price pulls back, you'd still be 12 pips in profit. When you enter this trade, you're not risking any of your actual equity. You're only risking profit from your previous entry. So all in all, stop loss really only matters once it starts getting back to your entry. Then you'd be, you know what I mean? But that's what leveraging is for. That's what Brian's mindset classes are for, is to help you guys understand how to layer into these charts and these positions, right? So understanding that we're going to be waiting for price to pull back. We're just going to see if price pulls back. It may not. May not. And it didn't. Let's see. Doesn't look like it does. And it won't always. There we go. So our swing trade has brought us in. Do we see the trend, right? We see that the lower time frame is falling off a cliff. Our intraday time frame has now started to follow. Do you also see the change in direction of your 4-hour trend? And this is all on one time frame. The 4XLG is super beneficial because you can read multiple time frames with the use of one indicator. That's really why I love it. That's what helped me be able to read and just be able to see these other time frames and see patterns better on higher time frames. Right? I'm gonna let this trade play out as you guys see what's happening. Right now, you really see price falling off a cliff. Our intraday time frame is now matched our lower time frame. So like I was saying, our lower time frame will catch up. It eventually has to catch up. All right. So now we're going to see what happens. That's what, yeah, as price moves. And that's the thing with the 4XLG, because it's reading the averages of price, it does adjust and it does move. So you just kind of have to be watching it, paying attention. Let's see what it's gonna do. I'm not explaining any re-entries just yet. I just wanted you guys to see price finish the trade. Right? I wanted you guys to see price hit take profit. All right, does that make sense? Are we all clear on how to use the 4XLG? One entry from a scalp. From a scalp. 78 pips on one entry. Your second entry, all right, 65 pips. You could have had a third entry, a fourth entry. So many, like there's just so many different ways I could explain it, but just the bare minimum, 2 entries, 65 plus pips, both of them. All right. Now, for those who are advanced, for those who are comfortable and understand the power of hedging, for those who don't tend to overthink too much, What did we get here? What did price do there? All right. So let me show you even better. Let me show you even better. All right. Did we get across? Yes or no? All right, we got across, right? What do we do when ketchup? I'm sorry. What do we do when mustard crosses ketchup to the upside? We buy. Because this is a pullback, so I say it's for the advanced. You have to understand how to read market structure, right? First take profit. I'm using my moving average, right? I'm using the closest moving average. It's just logical. If you're this close to a moving average, when the cross happens, clearly you can't use this as a take profit, right? Go to the next one. So that's why I'm using, you just kind of have to, there will be some because it's not like a strategy where there's hella rules written out or anything like that. You will have to have the understanding. All right, just take it to the next level. Quick pullback. All right. And when I see the cross, like I told you, I don't care if the candle's bullish or bearish. I'm entering the trade as soon as I see that cross. I don't really, not really worried about drawdown necessarily. All right. Trades in profit. Still not worried, right? Have your target. Speed this up a little bit. All right, target achieved. $8 pips, right? Standard lot, 80 bucks. 80 bucks. But you're also already floating 37 pips on one, 38 pips on one position, and about 48 on another. Plus another 8. Right? So there's so many different ways that you can catch pips using this. Right? All right, what did price do here? What did price do here? All right, let me see if that was TP. Hold on. All right, that was TP. What did price do? Let me see if you guys can see it. All right, it crossed. All right, it crossed. Let's see what happens. Let me extend that. Now let's see how this one plays out. All right, so eventually this small entry probably would have hit stop. But clearly you see it can happen that fast. Now, actually, particularly this, I wouldn't trade because it is consolidation. I don't want to see the crosses doing this up and down movement, because again, you just box it up. All it is consolidation. All right, it's just consolidation. So what I was doing in there is like super extra, but you could do all of that though. You could do all of that. Right? And then exactly like Brian is saying, a master candle starts presenting itself in here. Other things start happening. You already know the trend is overall bearish, things like that. So it's just so many different ways that you can use the 4XLG. I think that's why I also moved away from it, because I realized it was confusing a lot of people. I think giving everybody all of the options of understanding, you can scalp, you can intraday, you can swing trade, was maybe throwing wrenches in people's thought process, and it was causing conflicting information to be seen on the charts. 5-minute cross is doing this, but the 4-hour looks like this. So it was just too much. But in its simplest form, all you're doing, guys, is waiting for crosses to happen, executing when the cross happens, and taking it to the next moving average. If you're comfortable being a swing trader, blueberry's always going to be your final target. Blueberry's always going to be your final target. And also, 9 times out of 10, when price hits blueberry, it may actually start to reverse too. So it always just depends. Can you use this on binary? Yeah, you can. You can use this on binary. That's how I started trading binary, was with I was using the 10 and the 20 cross. Actually, let me be honest. I was using the 10 and the 20 cross, not the 4XLG. But you could probably use the 7 and 13, which would be the 2 moving averages that you're using, is the 7 and the 13. But yeah, it works. I took what, $400 or $500 to $11,000 in 6 hours, 7 hours. So yeah, it works. It works. Yeah, I lost hella money too though. I lost like two grand though. Nothing too crazy, but yeah, it works. It works. It works for binary. But yeah, that's really everything that the 4XLG is. I don't like beating this one like over the head because it's so simple. It's really simple. All right. What I will say is use the trend with the 4XLG at the same time. All right. If you just see price falling off a cliff, 9 times out of 10, it's going to keep falling off a cliff. So let's see some things, right? I told you water was about the 30-minute, 1-hour time frame. All right. We see the trend change. Yes. All right. 200 is the 4-hour time frame. We broke the 200 right in this level. All right. We see the trend changing. 8-hour time frame. We see the trend changing. And to be really honest with you, now do you guys see why I tell you to hold trades? So I tell you guys to hold trades. And all that was on a 10-minute time frame. 147 pips. Probably it doesn't take, right, a short amount of time. Oh, this one wasn't bad. Happened in about 4 days. Happened in about 4 days. But you have multiple chances to re-enter. All right, multiple chances to re-enter. When you start going to your time frames, you start seeing what we've been talking about, engulfing candles. All right, accumulation zones and things like that. All right, head and shoulder patterns, left shoulder, neckline, head, neckline, right shoulder. I don't know how I see these things sometimes, but you just kind of have to train your eyes to see them. All right, but I think that's what also helped me be able to identify patterns so easily, was using the 4XLG and being a scalper. Once I started understanding, okay, I just see the cross on the 10-minute, but let me actually study where is price going. Then I start understanding, oh, well, Uncle Jim. Then I start, right? You just start to see things mesh into each other and everything starts to become clear. Start to understand market structure a little bit more. I like the 4XLG. Actually, doing this class, it makes me realize how much I really do like the 4XLG. It just becomes a lot at times. It just becomes a lot. Yeah, 4 days is not a long time to make 140 pips. Some professionals don't make that in a week or a month. That's absolutely true. It's absolutely true. 140 pips in 4 days. It's what? It's a lot. It's a lot. It's a nice daily average. Are there any questions? It's a little over what? It's like what, 35 pips, 33 pips, something like that a day. It's pretty solid. Yeah, 35 is pretty solid. If 20 a day keeps a 9 to 5 away, 35 will definitely get you on a nice ride. If 20 pips a day keeps a 9 to 5 away, 35 will get you on a nice ride. All right. So it's not hard. It's not. It's all about, right? So you have the end goal. We know we want to end up down here. But what little steps are we taking and is price taking to end up down there? Right? Takes us first steps, mustard and ketchup. Second step, a break below water. Third step, break below mayo. And it goes on and on. I'm pretty sure, oh, this is GU. I don't know where the price is GU is currently. So like I told you guys, let me see, does it touch it? Blueberry always has to get retested. It's just the nature of the beast. All right. You had two positions, about, we'll say about 15 pips apart, 10 pips for easy math. 190 and 175 pips for doing work one time on the 10-minute time frame. Does it make sense now, guys? A little bit more sense than before. We understanding why I tell you guys the higher time frames and just understanding the overall picture really plays a big part when it comes to confidence in holding trades. I want you guys to be able to hold trades like this. Re-enter right here. Oh, whoops. All right. I want us to be able to hold trades for a month. I'm telling you, I need us to think different. Instead of trading 80 times throughout the whole month, winning and losing, breaking even, why not place 5 trades and sit on your hands and walk away from your computer for the whole month? Come back and withdraw your rent. Come back and withdraw your car payment. Why are we slaving ourselves to be on a chart? For what reason? Why? People like, I see people who barely trade. I see them in Ferraris. I'm not saying like material things, but I'm saying their life looks different than opposed to the people who are always on a computer. They don't get no sleep, no rest, no peace. I don't want that life for you guys. I don't want that for you guys. It's not setting you free any faster trading every day. Obviously, because you're still trading. But that one time that you place a trade and you legit let your money work for you, because I need you guys to realize every time you close and open a new trade, that's not your money working for you. That's you working for your money. The point of this game is to make your money work for yourself, right? Your money needs to work for you. The only way to do that is to let it ride. Let it ride. Every time you open and close a trade, you're working. So how much are you really working as opposed to how much are you actually free? Compare the time. if you got more than maybe, I'd say 100 trades, 50 trades, if you're trading more than that in 2 days, slow down, go somewhere, get off of the charts. You should realistically be looking at a place like, I say 25 trades a week, and that's even a lot. That's a lot. It took 9 days for this to happen. You know, in that same time, people are trading hundreds of times and not even making 188 pips. People are trading 6 times longer than this, right? They're trading every day for 9 days, and you've only placed one position. I hope somebody's understanding what I'm really trying to show you guys and teach you. You're not truly free until your money's making money for you. It needs to be passive. You don't need to look at it or touch it for it to make you money. That is what real success looks like in trading. I applaud the ones who want to trade every day. I just personally don't like being a slave to a chart when I could get the same result sitting on my hands and coming back in a week. The same result. You don't benefit anymore from being on the charts any longer. You don't benefit any less from being off the charts any less. It's not, trading success is not relative to time on the charts at all. At all. It is not, trading success is not relative to the time spent on the charts. It's not.
That's what it said in the.
What happened, Akila? You're good. Go ahead. You're good. I didn't even know you guys could unmute yourself. You're okay. Where did it say? It said that somewhere else? I said they wanted to be uploaded. We'll get it up real quick. Right? This is why I tell you guys all the time, get off the charts, get out of class, go live life. How much time are you guys spending with your families? How much time are you spending with yourselves? How much water are you drinking? What kind of food are you eating? I don't care about what your pockets look like. I need to know that your daily routine is already a successful one, right? You may be overworking for no reason. You think you need to be on the charts more when really you just need to drink more water or change your diet or add in a walk routine or something. I'm telling you guys, you got to be less preoccupied with trading. $17 trades last week, 700 pips. I could have held a couple longer. So, whew. Guys, 17 trades for 700 pips. That is a wonderful ratio. There's people with 100 trades, guys, and they're not even getting 100 pips. I'm serious. And that's only an average of 10 pips a trade. And they're not even doing that. I want us to start getting some hobbies this year. I need us to have hobbies outside of trading, like seriously. Because this year, I'm gonna break that addiction that you guys, the majority of you guys have. Not everybody's got it. I'm gonna break that trading addiction you guys have though. Because it is an addiction. And I'm serious about that. You guys think it's funny, you guys probably laughing, but it's an addiction. I'm so serious. I'm so serious. You need to find something else to do other than think you need to be on here 24/7. I'm not saying don't study. I'm not saying don't come to class. But all good things even come with moderation. All right. Yeah, thank you, Brian. Yeah, I think that'll be a good topic to talk about in the mindset. It's just having hobbies outside of trading. Having hobbies outside of trading. We've been walking, I think been walking pretty much every day for like the last 3 weeks trying to. I think clearer, right? Stop drinking this year. Like I had to change habits, and I'm already seeing different things change as well. So if you want to see different, you must be willing to do different, right? If you keep trying to sell that bullish candle above the 50 and you never learn or never do anything different, right? That, my friend, is why I need you to get off the charts. That's why I need you to take a break from looking at this all day. Right? It's okay to take a break. It's okay to take a day off from trading. It's okay to take a step back and say, hey, I need to recoup, regather myself so I can come back and be ready for next week. If you stay in that hole, you'll just keep digging yourself a bigger hole, right? Trying to climb out. Sometimes it's best to just sit in the hole, that the sand may start falling the mud under you and you start rising just because of the way that it works. I don't know if that even made sense, but you understand what I'm trying to say. Eventually, it all falls into place and it makes sense. You rushing to get there is not going to make it come any faster. And I'm speaking to myself when I say that too, for certain aspects of things. Rushing somewhere is not going to get you there any faster. It'll probably take you longer to get there when you rush. Like I wish it was super technical. I wish it was like hella complex, but it really isn't. It's not complex at all. It's nothing crazy. Yeah, GJ is gonna feed us. I'm trying to tell us. GJ's back in profit. Did anybody re-enter at this right shoulder? Did anybody re-enter at this right shoulder? Yesterday when we gave this analysis. And if you didn't, it's okay. I'm just trying to see who's picking up on things. And if we did not enter at the right shoulder, why? What was throwing us off? Let me realistically get rid of that. That's probably what it was. Right? That's why I really also kind of went back to this price action that we've been doing. I didn't want us too dependent on something like this and not see this right shoulder happen before price came back up above the 50. Does that make sense? Because this reversal was always here before the trend change of the 50 happened. Remember, moving averages are an average. It needs data before it can give you an update. So with price being flat here, when it was down here, no, it was down here and price was here, right? It's inaccurate. It's a delay. So that's why I've recently went away from delayed response EMAs or moving averages because they're all delayed and just going with what's happening in real time. And that's price action. Price action is always happening every second of every day except for Fridays after 5 and Sundays until 2, right? You get what I'm saying. And really technically it's still happening because price is still being bought and sold and transferred by the banks and by people in those countries. So yeah, price action is happening 24/7. I can't lie about that one. Right? If price is king, if news is queen, right? Then price is king. And that's just kind of how it works. Just kind of how it works. They go hand in hand. They're doing the tango right now. They're doing the tango. Any questions? Any comments? Any concerns? Question. Yes, sir. What's up, Brian?
Okay. So, good evening, by the way.
Yeah.
So I had a student ask me, and I wanted to double check with you because I don't feel like I gave her the wrong answer, but there is a, I also didn't want to confuse her. So
Okay.
on this chart, from from the bottom of that on my chart looks exactly the same as yours with that bottom zone. That's a daily zone of support for me on my chart. And from there I have price action going to the upside.
Mhm.
But for quite some time over the past year, GJ has been sliding. So I also have that trend line from the top side coming downward. So, well, I don't. She was asking me why is it that GJ is about to buy now as opposed to selling overall. Like she's asking me because of the fact that you can make the trend line on both. Why is it that we're I mean, you kind of just answered it now because you're looking at real-time price action.
Yeah.
And that's why we're taking the buy. But I didn't want to confuse her because she's not wrong in the fact that we are experiencing a longer spread of time in an uptrend, but we also are experiencing a downtrend.
Yes. For that one, it's just another one. If she's on the call, she'll probably hear it. It's one of those where you're not right. I mean, you're not wrong, right? But you're not right in this moment. Is one of those.
I couldn't get her to understand. I maybe I didn't have the right words, but everything that I was saying was confusing to her, and she was overthinking it. I know she was overthinking it, but it was also hard to explain to her that even though you're overthinking it, you're not wrong. It's like it's
Right.
one of those weird. It's just and I couldn't really make an example in any other chart. It was just this chart where it both made sense.
Well, if she's on this call, I have the answer.
I didn't see her in the list of participants, but
All right,
I
no.
encourage her to watch the video.
Yeah, it was a break of trend.
Yeah, when you do that, so I did that on my chart. I did the daily line because I have it up on the daily, and on the daily, oh, this is
This is you said the yearly, so I legit went to the 12-month time frame, and I just marked up the trend from 0.1, right, to 0.2, and even here, right, we see. Wait, let me actually 0.2 is here, right? So 0.2 is there. We see a break. Price has broken a yearly trend. GJ was beaten to the yen, right? The yen mostly is really probably what it. No, the yen was going super bullish is what it's been, and the pound got beaten to the dirt. Brexit and everything like that. That's when I came into trading. Since then, even the same thing with GU, and that's why we saw that some of that bullish move. That trend has been broken. So then I went just now to the 6 months, and you see it. This was our confirmation candle here with the break of the trend. All price is doing now is retesting structure. All right, it's just retesting this structure that was broken here. So it's so much happening for GJ down at this level.
It is, and on the daily, we broke the same structure to the down, like that same line is going downward, and we have candle closure above it. But what I advised was, if you're having this much confusion about it, and it's making you overthink, and especially in a space where you've gotten to where you don't overthink things, then just don't trade it. I understand it's pairs, but like go to your other two pairs and trade those instead.
Yeah, you just said something super important. I think everybody needs to understand, there is something called a no trade zone, a no trade day. Like, that's a real thing. You do not have to be in the markets every day. Seriously, I can't stress that enough, man. I won't be able to stress that enough, because it's for those reasons where you get one trade and it throws you off of your whole game. You've been winning, firing, killing them off. trade setup after setup after setup, smacking. And you get that one setup that you're just so focused on. Why? Let it go. Don't take it. Walk away from your computer. It's that easy. It's that easy. That's what I'm gonna tell Charlie. If you're getting bullied online, turn off your freaking phone. Turn it off. Walk away. Separate yourself from that whole environment. It's that easy. You just have to separate yourself from the charts. But a lot of us can't do that. We get off the charts and then we start doing this, and we're sitting on MT4 all day. That's a chart too, guys. That's a chart too. Get off of it. Get off of it.
Yeah, full transparency, just for anybody, like I always do in the mindset class. The two losses that I took last week, so I had the 17 wins and I had 17 trades, 15 wins, 2 losses. The 2 losses I took were because I kept saying to myself that GA and GN were so overbought. And I was like, they gotta sell, and they didn't. They won't. They just refused to sell. So I just cut my losses, and I had already been swinging them for a little while. So I just cut my losses and said, I'll come back to these. I'll make it back in a couple of other trades somewhere else. So it's not. And to what Sham said earlier, look, for the last week, I'm 700 pips in profit. I understand, and that's not boasting and bragging. It's just consistency. But it's like I can't. If I'm stressing about, like, if I want more than that, honestly, I'm being greedy. That's just crazy. Like I wasn't paying attention to how many pips I had for the week. I just looked at it now because of what Sham was saying in the class. But if I am thirsting like that, then I have actually a bigger problem that seems positive now, but it will end very negatively. And I only know that because it's happened to me before. So
Yeah, man. I promise you guys, I'm coming from a place of experience when I'm telling you guys don't do stuff. It's not like one of those where I'm just like trying to be like a parent. Oh no, don't go over there, sweetie. You're not supposed. No, it's like hey, if you do this, this what's gonna happen. It's not it's a not even a caution, it's a red flag. Stay away. Don't do this. Don't do it. Don't. You know what I mean? And again, it's gonna be hard. You're breaking patterns that and habits that you have. But it'll save you a lot of money, and it'll make you a lot more money. Or it'll just make you a better person. Just make you more confident and make you stronger mentally. All kinds of things are beneficial when it comes to trading. It's not even just about the money. It's about everything, the overall growth that it brings you. But yeah, I don't got nothing else, guys. That's pretty much everything. I really enjoy teaching the 4XLG. It's just so crazy, so much stuff you can do with it. This was like a super basic class too. I didn't want to get too deep into it. But yeah, hold GJ. We're going to the moon. Not even worried about nothing right now. We're in profit. GU didn't give us what I wanted, so I'm good. Gold didn't give me what I wanted, so I didn't call him, didn't send him. I was watching him, didn't like it. Gold GU still creeping down below these levels. Sliding. Sliding, right? Like it's out of here. So I'm gonna wait for this. Actually, buy GU. Buy GU. All right, buy GU.
G was about to do me dirty too because I had the same opinion about it. I think I opened up a buy like 2 days ago because I was like, yo, it's oversold. It's oversold.
Yeah, dude. It's on a tear. Who knows this pattern? Who knows this pattern? Who knows this pattern? Who knows it? Who knows it? There we go, Skeeta. Skeeta's been on point. Skeeta, you been studying? You've been going to study hall, huh? Yep, it's a fish hook. So what are we doing? We see a fish hook at this low. Um, I'm only sending quality. Only sending quality. Entry 33,915. Say 20 just to be in drawdown. I'm okay with that. 33,920. Are there any questions, guys? I'm probably gonna end it after I send this signal. Are we buying GU to the 50%? Yes, we are. Yes, we are, Brother Z. So I'm gonna mark up that 50% here. It's only gonna have maybe 2 TPs, and I'm gonna show you what they're gonna be. 1 second. Right. So because I know that we are realistically buying a pullback, yes, price is starting to reverse, but it's still considered a pullback. What I'm going to measure is the most recent move, right? This being the most recent move from the high to the low, right? I'm going to look for price to come and give me back at least 50%. To be realistic with you, because of the what's the word I'm trying to use? The ferociousness of this downward move, right? How vicious this downward move is. I know that the bulls have to come back. Right.
The strength of the
Yeah, the strength of this bearish move. And so to be even honest with you.
I know what it is, Shane. It's because so if you look at how almost vertical the line is, it's like it's too strong of a downtrend. Like it's almost like, because we know that as Sham taught us, price action doesn't move in a straight line, and that's almost a straight line. So it's dangerous basically. So it has to come back.
Yeah, this is too dangerous. So we're gonna take it to price is gonna give us 50%. I'm pretty sure on that one. I'm gonna worry about that later here. I'm pretty sure price is gonna give us that 50% move. Yep, price retesting structure here. Don't mind me, guys. I'm just kind of doing some stuff right now.
Yo, you know what's dope? I feel like you just opened up a window to your own brain as I'm watching you mark up this chart with no fib. That was kind of ill. That was kind of ill what you just did. How you marked it at the previous levels of reversals. Just off of your eye. That was kind of dope.
Yeah, and the reason why I do that is because 9 times out of 10, 50% or the golden zone of any move is going to be a previous liquidity zone, right? 9 times out of 10, a golden zone, right? The 50 and the 62 is going to be at a previous liquidity zone. So I'm pretty sure if I pull a fibs from the low to the high, this is the 62. It may hit the 70, but it's most likely the 62. And there we go. It's right at the 62. So that's why my eye was here where the liquidity zone was, because I really was looking for the what I'm looking at is what the bottom of price is doing at the top of a zone, right? What is the bottom of price doing at the top of the zone? Because technically, if I were to put a box on this whole zone, we broke above the box. So this would just be a retest. I'm looking at 2 different analyses at the same time. So yeah, you guys really are in my brain right now. Overall, I do also know that price is genuinely respecting this trend here. Genuinely respecting that trend there. All right. Again, you guys know why I don't mess with this, because it is what? If this is where I can see the trend, anything above it is what? Right? When you got true support and resistance, anything above it is what? What do we call that? It's noise, right? It's just noise. All this was noise. So this was the true support, right? Exactly. It's nonsense. So what I'm trying to get us to see is my bullish move will have to take me back at least to this trend line. At least. Why? One of two things. One, it was the 50%. Two, it's the downward trend line. Right? We're in a price channel. It's really what it was. It's just a price channel. Price hits a level of support. You fib it out. Price is rejected at 62. Because price is closing above the 62%, I'm buying. Why? Because it's rejecting the bears at this level. All right. But because we know it's bearish, we can't just say, oh, the bull's going to take over. All right. Even this bullish move is a pullback. I'm going to give us to the 50. TP1. Will be the 23. Which is 34,505. TP2, and really probably where I'm gonna stop, because I see what's coming, right? I see 4-hour trend is pointing downwards, right? Our higher time frames, right, is just now starting to change. Just now starting to change. But we do have this void. Price will have to retest to confirm that it wants to stay there. So that's why I'm just anticipating the pullback is really what we're doing. We're just trading a pullback. And I'm going to keep reiterating it is a pullback as price is overall bearish. So would we have two entries, the 50 and the 62? Take profits, yes. Take profits would probably be the 23 though and the 38. I would want to see, okay, right. Why am I only giving us the 38 first? Because this is what I'm also seeing. But I need to see price come back here first. You guys see that? Really, I'm going to move it here because price could give us a double bottom before it makes that move. Right? That's what I'm anticipating. I would like to see these moving averages continue to the downside, even when price is pushing up. Eventually, price will end up on top of the moving averages. Same thing here. Same thing here, right? I'm just looking for that pullback. I'm just looking for this pullback here. That's it, nothing more. Realistically, stop loss would be the previous Fibonacci level. All right, it would be the previous Fibonacci level, 34,340. All right, let me send this. 5075. We understand? Or is it confusing? Oh no, 5070. We'll do that. Mm. 34,505. 58.5 pips. CP2. 50, 70. 35, 70, I'm sorry. And 15. Man, guys, I'm so excited. I ordered some blue blockers. Man, I'm trying to save my eyes. I've been sitting in front of a screen for so long. So I'm hyped about that. I got some blue blockers coming. I want to give us TP3 and 4, like, to be really real with you. So I will. I guess, right? $35, 3, 35, 5, 35. $161.5. All right. Many questions? I'm about to end it after I send this last one. 161.5. I'm bullish on GU for this pullback. TP3 and 4 are anticipating that we get a break of TP2, right? I'm saying this for you guys here. I'll explain that in the signals chat too. I think it's 36,185. Let me see. Oh, cool. I barely missed it. Oh, wait, 62 is right here. $3,600. I was almost confused on which fib I was using for a second. 226.5. Stop loss 33,340. 33,340. All right. And that'll give us a 58 pip stop loss. So a legit 1-to-1 trade. 1 to like 1.1, right? All right, was it 58 pips? That's the power of the measured moves, y'all. Who took GJ? I mean, who took GU?
Just now, you mean?
Huh?
You mean just now?
GU, yeah, GU.
Yeah, I have an overall sell that's in drawdown, but I took the buy.
Okay. All right, cool. What time frame is this? 1 hour. We'll just say the 1 hour. It really doesn't matter. It was a Fibonacci setup, to be honest.
Yeah, my sell is on a larger time frame. I can't remember what my setup is on. It might be like the 5 or 6 hour or something like that. But I'm so the drawdown has so much room, so I'm fine to pull back. If we go a couple hundred pips.
All right, parameters got sent. If you guys have questions there, let me know. Don't be afraid to ask me. What about that reverse fib move? We can't talk about that one yet until we get back into our TP zones. I'm not looking to sell until I see price get back to at least TP2 for the buy, right? So right now, I need to see this buy break back above these two Fibonacci levels, TP1 and 2 pretty much, just to confirm the volume, right? Right here, price can't continue to the downside with no volume. It needs to grab some orders. So that's why I'm anticipating this pullback for the buy. of going to TP1 and 2. I put TP3 and 4 tentatively that we get a break on TP2 and 3. TP2, I should say. A break and a retest, which this is what I would be looking for.
That was a really good question.
That was a great question. It was a great question. But yeah, if there's no more here, I'll even do you one better. I'll put the chart in there for you, Brother Z. That way you could refer to it. But yeah, other than that, guys, it's a wrap. It really was a 30-minute setup. Now that I'm thinking about it, it was a 30-minute setup because that's where the cross was. But you get the point. You get the point. But yeah, that's all for today, guys. If you have any questions, hit me up. I'm always here. We had a pretty good week overall. Slapped a lot of TPs, learned a lot of stuff in our sessions, made some progress, got a funded trader, right? So a lot of things to be thankful for and happy about this week. So let's even celebrate those small victories, right? I need to celebrate those small wins so that way you know what it feels like to win. That's really all I'm trying to get. I just want you guys to know what it feels like to win. I'm really enjoying my brain stretching like a rubber band. I'm enjoying you too, Brother Z. I love it. I love the eagerness to learn. But yeah, you guys in the chats. Yeah, man, stay happy, stay healthy, stay hydrated, and I'm gonna holler at you guys later.
Hey,
Huh?
I got a quick statement.
Mhm.
I wanted to say thank you to you personally. I know you stopped me from thanking you like in private like all the time, but publicly I wanted to say thank you just because this is not the like all of the concepts and everything is you've simplified it in a way that's very easy for everyone to learn. But it's what's interesting to me, especially about this class, there's so many other things that can happen, even like within this setup right here. Like there's so much advanced sauce that like you could just regurgitate, but like not regurgitate, but you could just throw out there so easily. But the fact that you don't is like commendable because you don't want to make it too complicated for anybody. Like there's so many other things that can happen to make extra pips, like catching reverses on smaller time frames, all that extra stuff. But you don't say it because you don't want to confuse anybody and you want to keep everybody in profit on a more simplified level. And I think that's awesome because I have a problem. I talk too much, so I'll say all that stuff at once and I'll have everybody all twisted. Like so. I appreciate you for that ability to teach to the simple and the complex. I appreciate that, man. And honestly, even though I know some of those things, I'm still learning so much from you. So thank you very much.
Yeah, I appreciate that, bro. Anytime, man. Anytime. And I learned from you guys more than anything. I've learned a lot about myself in this last 6 months. I still learn about myself every day when I'm interacting with different individuals and things like that. So a lot of the appreciation and thanks has to be given back to you guys. Honestly, I wouldn't be where I am or who I am if it wasn't for you guys. So yeah, thank you guys as well. Who sees what I see on this 2 time frames? Who sees what I see? Who sees what I see? What's it called? There we go, Renee. Shout out to Renee. Thank you for that one. I just wanted to see who got it. And it was going to be Renee. I just wanted to see. I love it. I love it. Renee was having trouble with them inside bars, and now she sees them like it's nothing. All right, guys, I'm really about to get off of here, though, so I can go get this screaming, baby. I appreciate you guys. I love you guys. And I'll see you guys in the chats. Adios, everybody. Drink some water, man. Drink some water. Go drink some water. Have a good one, Brian. Appreciate you, brother.